Hey, good morning. Happy Monday to all of you. I've got an action-packed and solution-filled video for you today. So you definitely want to hang on and watch throughout the whole thing because we're going to figure out a way to help you solve problems, get people into homes, and put additional money in your pocket. I'll show you how. So first and foremost, what's going on in the market? Let's have a quick look at that. So no doubt that since the start of this war, we have seen this tremendous downfall in the mortgage-backed security markets that have pushed the rates up. I've shown you a few little clips here as to what it is that we go through during the day. So please be absolutely the nicest you can be to your loan officer, because we tell you one thing and 5 seconds later it's something else. Markets are starting to flatten out today, and I'll explain to you why. But here's the thing. So Good Morning America is showing that Americans are paying $575 million extra per day on gas and diesel. I'll tell you why this comes into play here. And then the European Union natural gas costs and expenditures are going up by 92%, which then turns around and sends up the cost of fertilizer and diesel across the board. These were numbers from last week. They're actually worse this week, but more than anything else, we need to acknowledge that this is happening and then find other ways to build around it and bring you valuable information and tools that you as professional real estate agents can use to still make it through all of this and bring value to your buyers. You ready? Let me tell you a little story. All right. So the deal was dead. A few weeks back, we had a realtor partner of ours bring us a deal that it was absolutely dead. Why was it dead? Well, the clients were securing a bridge loan elsewhere from a company that shall not be named, but this company that shall not be named requires, they say, hey, we don't need a payment, we don't charge you any interest, but here's what we're going to do. We're going to charge anywhere between 2 and 2.25% of your departing residence sale amount. In this specific case, the departing residence sale amount was $1.85 million. So the buyers, as you can see there on the right-hand side right here, the buyers were being asked to pay $42,000 in bridge loan fees. $42,000, and that basically broke the deal. The buyer was like, I'm not doing this. I'm not paying $42,000 to access this money. That's asinine. So the realtor partner knew what it is that we were building here, brought that loan over to us, and let me just walk you through what it is that we did. So we were able to secure a bridge loan for them on their $1.85 million departing residence. What was our fee, you ask? $1,000 flat. Say that again, $1,000 flat versus $42,250. That $1,000 flat was agreeable by the folks that were buying the house. We did the bridge for them. We did their qualifications for them over here. And shortly after, they went out and purchased a $2.1 million home. And shortly after that, this home at $1.85 million got an offer on it. So all good, set aside. I'll give you details in just 2 seconds. But I want to bring your attention to something. This bridge loan of ours helped these folks buy their dream home without having to pay $42,000 to somebody, and it helped our realtor partner add and generate $94,125 of income that would have been lost. Again, 94 grand worth of income that would have been lost if this product and this level of thinking didn't exist. Okay, that's $52,000 that they earn on the sale, on the purchase rather of the property, and $41,000 that was their listing commission. So great story. Check this out if you want to discuss in details. Happy to jump on a call with you. All right. So what's going on in the market, you ask? Well, we got a little bit of a good news today. And the good news today is off of a consumer sentiment survey that came out completely in the garbage, saying that consumers feel horrible about what's happening in the market right now, as rightfully as we should. So today we're up 41 basis points. This week we have a JOLTS report, which is Job Opening Labor Turnover Statistics report. The FHFA, the company that runs Fannie Mae and Freddie Mac, will be releasing their home price index. Case-Shiller home price index is for homes that are in the jumbo valuation. So on Wednesday, we'll get an ADP jobs report. That'll be the precursor to the almighty BLS jobs report below. Again, jobs will really, really matter at this, but you know what matters more than anything else is the fact that if we end up having $7.50 diesel prices maybe soon, That's what their analysts are expecting. When that happens, we spent a ton more, like it said before, $570 million more on gas. When we spent more on gas, then we stopped spending elsewhere because we have no other money to spend. And that in and of itself is recessionary, and recessions are deflationary. So that's why you're seeing that green signal today, is that the market's going, okay, this thing's going to head into a recession and prices are going to come down because people are not going to be buying as many goods and services. Okay, hope that makes sense. Here we go. What's going on with rates, you ask? So I posted Friday's rates because I wanted you to see that. Friday's rates ended at 6.62% nationally, 6.65% for jumbos. This morning, all but flat, really, at 6.64. Now, they're flat off of that 41 basis point pickup. So that tells you that the traders are very nervous about what it is that they see. Because here's, at the end of the day, we can deal with high prices, you guys. We can deal with high rates. What we can't deal with is it's on again, it's off again. It's going to get settled. No, it's not. It went this way, but then it went that way. We need help, but no, we don't. So the traders are unable to find a steady line from the administration that they can hang their hat on. And that's why you're seeing as much volatility as you have been seeing every single day. So I'm hopeful that, you know, these things will come all together here and things will settle down. But for the meantime, you have other ways and thinking outside the box as real estate agents to serve your community and take great care of your clients, meanwhile putting bread on the table for your family. Okay? All right. Quick reminder, this is national average rates based on purchase loans, 25% down, 780 better with better credit score. So be sure that if you're a consumer, you're watching this, visit with your people so make sure you get the right information. Okay? As always, appreciate you. Thank you. Subscribe, like, comment, share so others can be as smart as you are. Thank you, and we will see you again on the next one. See ya.